Welcome to this week's AlphaMind podcast with me, Stephen Goldstein, and my co-host, Mark Randall, where we talk about the behaviour, psychology and mindset required to succeed in the trading and investing world. Today we are delighted to chat with Richard Matthews, a near 50-year veteran of the markets. Richard actually started as a trainee broker back in 1973, which means that if you combine mine, Mark's and Richard's experience and put them together, you get not a lot of hair. That aside, you have someone here who has seen it all, who has been around the block a few times, has vast amounts of experiences, and has some great advice to share with traders of all levels. Here are a few clips from this week's episode.
Yeah, it is, as I've just said, to have the discipline, to remain humble, to know when you're wrong and put your hands up and say, I got it wrong, the market's right, I'm wrong, which is a hard lesson to learn. Even after all these years, it's hard to say I was wrong and the market was right. To me, that's the most important thing, the discipline and not breaking your limits and saying, I always trade like this. And this is this is where my stop is. And you stick to your stops and you don't try and outthink the market. Because sure as hell, as soon as you start moving stops, you'll get absolutely murdered. Oh, I just have another little trade. Oh no, I'm going to move my stop. Oh dear, that hurts. A personal thing. Whenever we had problems as a broking house, we used to put a spread on. Immediately we'd put a spread on. And I think as soon as we put a spread on, we were wrong. We should have just got out the trade because we knew we were wrong.
Before we hear from our guest, we would like to mention that a big part of what we do is about arming people to be at their very best. And a big part of being at your very best is having the best tools, the best training and the best education possible. That is why we partner with the Society of Technical Analysts, the STA, as our sponsorship partner. If you are serious about becoming a serious trader, then learning technical analysis properly should be something you should consider. This is why we highly recommend looking into the STA Technical Analysis Home Study course, which is an online version of the course which supports their diploma program that is delivered at the world-renowned London School of Economics. AlphaMind podcast listeners can get a discount to this course by visiting our AlphaMind blog page, that's alphamindblog.blogspot.com, or just Google AlphaMind blog and go to the page link STA Home Study Course. Now on with this week's podcast.
Well, welcome to this week's AlphaMind podcast, and we're delighted to have Dick Matthews with us. You'll come to learn that us three dinosaurs, me, Dick, Steve, and me, that's three of us, can't even think on a Friday afternoon. But we got something like 120, 130 years experience in markets. Dick, welcome to the show. I won't sort of go into it myself because I want you to tell your own story. So tell us where you are and welcome.
Hi, good day to you both. And 130 years, that's quite frightening, isn't it? I mean, I'm 48, I think, out of that 130 years. And quite incredible to look back. And I think the first office I started in was in Lee House and London Wall. And I think it's been knocked down and redeveloped 3 times since I worked there, which makes me feel really old. So I don't know if I just give a little bit about what I did in those days and then move on and just fire away some questions, I guess is the best way.
Yeah. Well, welcome to the podcast. And we just tell your story.
I left school having not caused the examiners too much trouble with my exams, and wasn't sure what I wanted to do. And my dad said to me, go and work, and whatever you earn, I'll match, or whatever you save actually, I'll match, and I'll let you go off abroad and learn a language, which is something which I probably one of the few things I wanted to do is learn Italian for some unknown reason, nothing to do with Italian cars or Italian women. And first job I had was as a band boy in Covent Garden, which was bloody tough, hard work, up early. And then one day I was going home and I saw a bit of newspaper on the floor of the tube train. And it was a bit of pink newspaper from the Financial Times, and they had an advert in it, and I can see it now. Boys and girls, come and make money in the city. And I thought, let's go and do that. Turned up at Phillips and Drew for an interview. Very pucker, really tip-top stockbroker at the time, probably in the top 3 in London. really proper, amazing research, amazing people. And for some unknown reason, they gave me a job. And I started as a board boy, which people don't. I don't think they still have. I'd be surprised if they still do, with a bit of chalk, and we used to put the prices up and who was buying and who was selling. Naturally, as soon as you got a price up there, that the market would change and you were wrong, and you get something thrown at you. The other lovely duties along with that were going out on the sandwich run and having to remember 25 different sandwiches, and of course the one sandwich that you wanted to impress the person with, you'd get wrong. Paul Spensley, who you guys may know, was my first boss there. He ended up at TSB at one point, in a Deutsche Bank. Really nice guy, but every time he asked for a sandwich, I'd get it wrong. And my other duty was at the end of the day, we had to tot up all the deals that we'd done. So we'd have an overnight book, week, month, 3 month money book, and we had to sort of do the totals. And I would sit there, and you had to do them longhand. This is pre-calculators. And I would sit there doing them, and I'm pretty good at math, but every time my boss walked over, looked over my shoulder, one of the partners looked over my shoulder, he'd just say, "That number's wrong, boy." And he was inevitably right. There was a chap called Michael Cohen, who was the most incredible brain. And years later, I ended up working with his nephew, Vic Cohen, who's a lovely man. We worked together at RP Martin. Anyway, so from there, I went on, stayed as a money broker, went through RP Martin. This is pre exchange controls being lifted. Do you remember those days when you used to get a stamp in the back of your passport that you were allowed to take 50 quid away on holiday? Sterling was traded offshore, and I can't remember what year it got lifted in. I don't 79.
79. I was in that department when I started the bank. I was in exchange control.
Yeah, and all of a sudden the world seemed to open up. I was doing arbitrage. Carried on doing that, learnt how markets moved, and then saw the futures market opening. I thought, well, I started off as a local authority broker, broking deals with local authorities, and now a money broker, an international money broker. Let's go and see what futures do. And that signed up in the futures market.
Okay, and I mean that must, sort of people hearing that now. I mean, it's probably hard for the young generation and the modern generation where everything's done electronically to relate to that. I mean, but it was smoky dealing rooms, old-fashioned phones, no live prices on a screen with a chart.
We had no screens,
at
all. We had a book, and the left hand side of the book was your bid, and the right hand side was your offer, and it literally was a book. Calculators. I remember the first calculator was like the size of a desk, and it was used for working out yields on certificate deposits. But the first, and then all of a sudden it suddenly changes. It's really funny things. I remember going to, I can't remember the name of the pub, the Crowd as well, I think it was in the Barbican, and it's the first time I saw a video game. Remember the old tennis game that they used to play on a video screen? And then all of a sudden, electronics seemed to change, and everyone had calculators, and it changed the market because you could do things much quicker. You didn't have to have a piece of paper and do calculations on that. You could do them rapidly on a little calculator. And then screens came in. The first screens, Reuters screen, which I remember my boss at the time, Bill Dyson, who sadly died a couple of years back. I remember him turning around and saying, "This is the end of the market as we know it, boys." And that must have been 1975, I think, the first Reuters. I might be wrong in the year, but it was quite early on. And they were static. You just put your prices up once or twice a day. And amazing when I look now and you see what you can do on a Bloomberg. Absolutely incredible.
Well, I mean, it must be, I'm just wondering, to the people out there listening to this, thinking, how the hell am I going to trade without any charts? What do I know is going up or down? I mean, even if they don't use the charts to trade and they have the fundamental news, it's a pictorial representation of what's happening in real time. And of course, that wasn't part of the world that I started in when I started. By then you were a veteran, But I started in '86, and we still had screens with just numbers on. We had the Reuters FX screen, which just displayed the foreign exchange prices, a bid and an offer.
That's right.
And
Michael Bloomberg was still a dealer at Salomon Brothers.
Yeah. And I remember thinking, the traders were just, I'm buying this level, and no one was using charts apart from the Japanese guys around me who were writing them by hand on the wall.
Yeah. And
they would be.
It's so much I was talking to Johnny Ramkins, who's a cable dealer at NatWest, about last week, and saying it must be, for people like us, it must be so hard because you don't have the money brokers, you don't have voice broking, it's screen broking. So when you had voice broking, the role of the broker was not only to make a price, but to give a feel for the market, because we were the market. We saw everything coming into us. So we would know who was buying. We couldn't necessarily reveal who was buying, but we'd know where the big orders were. So we could read the market pretty well for our clients. And so we didn't, I don't know, maybe we did need charts, but it never crossed our minds to use charts. And the first time I saw them was, I think, when futures opened, in America.
Yeah, I was the first chartist at NatWest that would have been 82, 83, because I was on the floor. On the floor, you needed to sort of find yourself a bit of a niche. And I was more of an artist than a mathematician, so I couldn't really approach this stuff mathematically. But these guys from Chicago, I think Tony Laporta maybe was one of them, were started to do the point and figure charts on paper on the floor. And I picked up this stuff and, started to create forecasts, got really known for it on the floor. I had my own Reuters series of pages, NWBF, G and H. Pretty much the whole floor was looking at those for levels because there weren't many others doing it. But actually, it was a real great niche for me because, I didn't care what the product was. I could have a view. And of course, that's the power of technical analysis and learning from the beginning. And, it was much like the guys in the 30s that were reading the tape. If you could do, point and figure stuff, you were essentially reading the tape of the market. And so you had an edge. And I think it was around about 84 that I think ADP Comtrend came up with a platform that you could actually start doing relatively real-time analysis.
That's why I worked with them for a while.
That became a luxury, ADP. So the printing paper costs as much as a normal computer nowadays, but apart from that...
miles ahead of its time, wasn't it?
It was fantastic. But it changed certainly the way brokers then were able to, convey information, ideas onto clients, rather than, as Steve said, going onto the wall. Well, I think we still had our very, very long-term charts on the wall, drawing lines on, and that was going on, and you were manually updating them. And you know what? It forced you to understand the market. I think things perhaps nowadays are, you don't need to have the understanding to suddenly pick up an app and suddenly you're in it. But actually, to have had the benefit of learning process, kind of finding it out in your own way, but in such an environment, I think was very, very useful. And of course, that endured in terms of a skill throughout our careers. And of course, it comes back to this idea that learning from the right source becomes really, really important, and learning through the right process becomes important. But whilst we all say it was a manual time, as a broker, you were holding through non-farm payroll the interests of 10 clients all wanting the same thing at the same time through 3 different direct lines to all different sorts of markets and sub-products. And you were expected to give response immediately in nasty, volatile conditions.
Or standing on your feet.
Standing on your feet.
Being elbowed.
And, so it's been a bit of a blessing. It turned into electronic trading. But, actually, that was, looking back, that was the fun time. That was seriously fun to be able to do that. And it
And
kind
the
of,
skills
it
as well. I mean, I think
made you.
that people. Actually, two things before I say about the skill. I will say Tony the Pulse is still trading, still using the same charts,
That's right, yeah.
tweets
Yeah.
and all sorts of things.
No, absolutely. He's got. I think I teed him up for a podcast last year, and because of COVID, it never happened. But I think we're looking to get him back on.
He's still got the great voice, unbelievable voice. I
He
can
looks
hear it.
looks a bit different, like the rest of us.
Yeah. But I think the skills that you needed as a floor broker, I suppose they translate into electronic trading. But I hardly dare say the word. The amount of spoofing that was going on in the market, but people knew that they could get lifted if they spoofed the market, and they would get smacked. And I think that's a big difference to me now. Looking at electronic markets, they're almost purer, but in a way harder. I would think harder to trade because the emotion isn't necessarily there.
Yeah, no, I mean, market depth, okay, that's fine, but market depth doesn't necessarily mean what real market depth is, as we know. There's all sorts of stuff going on there that I'm sure hasn't stopped.
I think the emotion is still there, but I think it's represented in a different way. If you speak to crypto traders, and I've been on a couple of calls recently with crypto sites where they've had me on the podcast, and they see the emotion in the price action. I mean, if they don't do it in a pit, obviously, but it's still represented in the market.
Yeah.
It's just that you have to attune to it differently. I think a lot of screen traders couldn't make the adaptation to. A lot of floor traders struggled to make the adaptation to screen trading, just because it was such a different way of doing it to what they'd done all their life.
But also that a lot of floor traders could see the flow being done. They could see when I was at Refco, they would watch my hand signals to see what I was doing. And very easy to be a floor trader when you're jumping orders. And I think that they got a surprise when they could, they thought they were clever, but actually, fact, all they were doing was reading flow. And when all of a sudden, when that flow's taken away from them, I think they found it really, really tough, to be screen trading.
It's possible to, but the trouble is, if you've never floor traded and only screen traded, and if you watch the markets day in, day out, every day, after a while, you start to recognise behaviours in the price action.
Yeah,
you start to see disconnects. I always remember, and I've told this story before on the podcast, of a trader I coached at a bank, an FX trader, who, and this was only about 4 or 5 years ago, who told me he did FX arbitrage, and I'm sort of completely disbelieving of him, because no one's done FX arbitrage since the late 80s.
Yeah.
When you could have some sort of order flow advantage.
Yeah. Well, since computers were invented or became relevant.
Yeah, but that went because PCs killed the electronic trading in its first form, killed everything. But he said, no, genuinely watches it and looks at the three legs of, say, a spot trade, a euro dollar, euro yen, and dollar yen, and goes across the three of them in and out all day long, making very small moves, seeing which two are going to move and which one to leave. And he does it in the behavior of the price action. And it's really pattern recognition. That's what it is. Yeah. It's not true arbitrage. There is no real difference, but it's pattern recognition, which is what I guess the floor traders were doing, but using hand signals and the noise level, the crowd, etc.
And I think that, I'll still be, it drives some of my colleagues mad, and I know it drives my wife mad when I'll be watching something or something will come on the news about the markets, and I'll say, oh God, that's a bloody sell there. And it'll be a market I don't even watch, but you can take the emotion on board and you can look at chart patterns and you can turn it back into what you grew up with. It's almost like a slightly different language. It's like speaking Spanish and someone says something to you in Italian. It's a different language, but you can understand it. I'm sure that we all still understand chart patterns, and I don't know whether you do. Well, I'll still turn them back to how I would have seen it. Oh, there's a big institutional buyer in there. All the institutions are in it. Pop, 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 pop. Oh, the retail's getting in now. It's going to peak. And just by looking at charts, you can still see that, or I can still see that. I don't know whether that's just me
no,
believing
definitely.
I can.
Definitely. Yeah.
It's a pictorial representation of human behaviour and human emotions,
Yeah.
and that's what you did. You felt that being a trader in the middle of the pits or being a broker, and you could hear it in the I could detect when I was a trader. I could detect almost voice changes in my brokers. They weren't allowed to say, we've got X selling or Y selling, but you could just detect something that unconsciously you like made you feel uncomfortable about being long, so you'd go the other way around or get out of your long side.
Yeah.
But nothing
though,
was said
isn't
to
it?
you.
The voice or the tone or the pitch or the energy in the voice conveyed so much.
Oh yeah. I always remember once I was trading, and I don't know why I was doing it, but I was trading silver. I was on a prop desk at a bank, and they'd said, no, I was a rates and FX trader, and they'd said, look, you can trade anything you want, Steve. Commodities, energy, indices, and I'm like, okay, let's have a bit of fun here. And I looked at the silver chart, and the silver is about the worst thing, especially in those days in the 90s. You could trade off a chart, but I didn't know that, and I had a little dabble in it, getting some prices from our commodity desk, and then the commodity guy on the commodity desk, his face was like, so, about that a couple of days later, there was a look of horror on his face, and I picked it up in seconds and just exited my position, not knowing what it was, and it dropped about 20% in about a minute, and I would have been wiped out for the year, literally on a very small trade. And I was like, well, what the hell happened there? And he said, I'll tell you later. And I went back to him later on, and he went, the producers came into the market.
Yeah.
That's what used to happen.
Yeah.
And I had no idea, because not being, we didn't see that generally in FX or rates. I suppose we saw maybe some central bank intervention, but not just producers suddenly coming en masse, or Indian farmers moving en masse.
It's interesting you say that, because I worked for Sukden for a while, one of the sugar traders, and soft commodities fascinated me, because you'd see that the whole time. You'd see a big producer come in the market, and the market would suddenly run away, or whatever. And I always thought, actually, that's relatively easy if you've got those producers working on your side. But actually, if you translate that back, certainly into FX and futures, and probably deposits and FRAs, it's the same. Because when I was broking short sterling, I knew there were certain clients, when they came on, that they would move the market. And certainly in the sterling denominated markets, whether it was cable or sterling FX or sterling deposit, that they could in effect be a producer. I don't know whether you agree on that.
From a government point of view, they were managing the government debt. They were issuing, paper.
Yeah.
They were fundamental to the platform. And I know that when Ron Porter, who was the treasurer of NatWest, went out to Chicago in the, I think, late 70s, it was him that came back with the, we need to have futures in London. It's the last part of the jigsaw that we haven't got. And so they then essentially, lobbied the Bank of England, and hey presto. But I think the business that I was in, behind me were the people that created the FRA market.
Right.
Behind them were people that created the ECU market.
Oh, God.
And kind of the origin of these things was at that time when we started to get a degree of freedom about, sort of things that were out there. And all of those names were very much involved in this sort of, essentially, this commodity of that product. And I think, of course, the diversification of that accelerated post Big Bang, when suddenly you started to realize that there was a whole lot more out there than just short end futures and gilts. And I think the Americanization almost of the city, it was a different philosophy that turned up almost overnight. And the flows changed radically, literally overnight, and things got busier. And then it was more important about, well, how do you manage yourself through this stuff? Because your days, when we first started on the floor, it was like a 9:15 start, and it finished by 3:30.
Yeah.
Well, and which was fantastic. You go off to play golf in the afternoon and all of that. But, by 1990, it was a pre-7 a.m. start, and probably every now and then you were past the Chicago close to a 9:15 S&P close.
Yeah.
And you were kind of expected to be doing that. So that became a difficulty for a lot of people. And I think as the floors shut down and people started to go on to desks, as it were, they started to realize that they were no longer just almost like a 9 to 5 floor job. They suddenly had to be there, and it's difficult to switch off for a lot of those people as well.
Do you know what, Mark? And Richard, I'm hearing this, and as we're talking, I'm trying to think, how is this? What's the audience getting from this? What is the value of this to them? How should they, I suppose, think about what we're talking about in terms of what they're doing? And there's a number of things. I mean, one is, you need to know the history of what you do, of where it's come from, and that can be really valuable and useful. So there's a little bit of a history lesson here, I suppose.
Oh, for sure.
I mean, I was just thinking, Richard, someone like you started your career closer to the days of Jesse Livermore than the days of now. So you've got enormous, enormous context to bring to what actually is really going on, to the source of the market. Another one is that, and sort of following on from that markets now, and especially for people joining who see it as a game, it's increasingly abstract. It's just numbers on a screen going up and down.
Yeah.
And you sometimes forget that those numbers represent something that's very real. They represent stuff being produced and stuff being demanded, and money being lent and money being borrowed. There's always a real transaction at the source of every single one of them, and the need for people to then hedge that and do something with it and not be exposed, and to bring it to market. So it can sometimes it can get a little bit too abstract for people, I think. And it's always worth remembering that there is a real need behind whatever is trading in the market. If a company goes public, they're trying to raise funds usually, partly for their investors, maybe partly because the directors want to monetize some of the value they've built in the business, which they probably deserve to, having put an enormous amount of work into building it up. And then, of course, another thing which people don't think about is the loss of the exchanges. That often these markets now have stepped in to fill the role that exchanges used to fulfill. That it's become kind of democratized in a way. The market is often the exchange itself. We don't have a futures exchange anymore. In the equity markets, other than the cash products, which is just a small part of the market these days, who is making the market? It's the street doing it rather than guys on an exchange. They're fulfilling that role. And a lot of people are the market makers.
Well, I would just say on that, though, that, I mean, the CME and ICE have kind of taken over the whole exchange, product range. So, I mean, price discovery is still going on exchange, at a professional level. But of course, now they have the retail influence coming in as well. And of course, going through the CFD market, through the IG index of this world, they are influencing price per se. But I think the liberalization is that what in the past was a professional lockdown market no longer is. So the people now are suddenly realizing that actually, if you wanted to trade the market 30 years ago, you couldn't trade the market 30 years ago. If it's one of us thinking, we want to just do some trading as an individual, bloody difficult to do it. I mean, it's almost impossible to do it unless you had a significant amount of money in the background. Now you don't need to be having any money in the background. You can just turn up and be exposed to it. But I think it's also that knowledge of what you're getting exposed to. People can't quantify that. What they're getting exposed to is real world dynamics.
But that low barriers to entry is a big problem for a lot of people.
Absolutely.
That's why so many people, they get lulled into this market and then they lose everything before they've even learned how to do it.
Yeah, it's the sweet shop with the door open and a bunch of kids outside thinking, no one's going to pop in and nick sweets. No one's going to. And suddenly it's gone, right? And I think I wonder whether that door can be closed now, because the door is open, the access is there. Unless the regulators do something about it, which they don't seem to be. Obviously, you can have more margin up at exchange, you can have higher fees, but it still looks as though access is not going to go away. And in fact, if anything, with the gamification side and people building models and algos, it's potentially easier than ever.
Do you think that's a good thing for the market, though?
Difficult. We'll tell you in 10 years' time, Dick.
I think it exposes a lot of people. I mean, when you were a broker, when you were both brokers, it was a very professional business. It was a really healthy ecosystem. We couldn't do it without the brokers.
Yeah.
And a lot of them are, still my great friends these days. And, it was all part of it. We all kind of supported each other. And now I feel sometimes a lot of, not so much here, but a lot of the retail brokers are just there to exploit people. A lot of their models work like that.
Well, it's when you get an email from a friend who works at a CFD broker, see the numbers. 87% of retail investors lose their money. You just think, God, what sort of game's this? But
I think that's a bit of an understatement. I think if they were to be honest and say it's 99%, no one would ever play.
Yeah, I think it's amazing. But I guess the first people, it really changed when futures opened, didn't it? Because up until then, you couldn't trade as an individual. If you had a view on FX or whatever, you couldn't really trade it. But all of a sudden, you had the Tony Laportes and the Mark Stantons and Terry Crawleys, who came. Or Terry didn't come to London; he was in London. But Mark and Tony came over as individuals and traded as locals, and that democratized the whole thing. And boy, they can take Barclays on, they can take NatWest on it if they've got big enough, excuse my language, balls to do it. And I thought that was wonderful to see at the time. And that, to me, was the start of democratization of the markets, the locals.
Just coming in very quickly to remind our listeners that the AlphaMind podcast is sponsored by the Society of Technical Analysts, the STA. If you're serious about trading and you're serious about developing yourself as a trader, do look into their home study course. It is based on the diploma program which they run at the world-renowned London School of Economics. You can find out more about it on the AlphaMind blog. Just Google AlphaMind blog or go to alphamindblog.blogspot.com. And there you can find out how listeners to the AlphaMind podcast can get a discount on the full cost of this online course. Thank you, and back to the podcast. They all supported everyone, though. They mentored the people around them.
Yeah.
That they taught each other. It was a fantastic learning environment. We had Adam Nash on. I don't know if you know Adam. He was one of our first guests a couple of years ago.
Yeah.
And I worked with Adam as a bank trader back in the 80s. He was actually in our middle office at the time, and he got a job on a trading desk at the Japanese bank I worked at, and then he moved to BNP. And what happened was, after about 10 years, he decided to go down on the floor and give it a go. He wasn't particularly enjoying the bank trading environment, and he got taken on his wings, under the wings of a couple of locals who showed him the ropes, because he didn't know what he was doing down there at all. It was a completely different game. And then what happened was, he was doing okay, but when it went off back to screens and none of them could handle it, he'd done screens before. So he was only familiar with it. But it was that learning environment, he said, being taken under someone's wing and these guys showing you the ropes and supporting you. And he said, it meant so much to him, and he's developed to be a really successful trader.
I guess I'm going to ask something to you both actually on that. What do you mean? What do you think nowadays it means by saying to somebody that's coming into the market, I'm going to show you the ropes?
That's a very good question.
Because we knew what it was then, but what is it? Where on earth do you start now?
I guess, I've never thought about that. It's a good question. I guess I would start by explaining leverage, the dangers of it,
risk and leverage. Yeah.
That is really interesting because I don't know how important fundamentals are anymore in the markets. Whether it's the retail trading.
Yeah, it's kind of that stodgy stuff you read in the newspapers. Really, do we want to bother with that? Because they're not macro trading, are they?
No.
It's great first to understand the origin of that phrase. That phrase came from shipping. From the early sailing ships. So if you were new, the first thing you would be done is showing the ropes.
Yeah.
If you didn't understand the rigging and the way the sails worked and the system of ropes, you were useless to them.
Yeah.
So it's very vague, isn't it? It's very vague. So you can sort of understand, well, where do you start? If you're new to this game, or if relatively new to this game, what do you need to acquire as sort of advice and skills and guidance to be able to sort of make this a success?
I think what Richard said is really important. He's talking about the very foundational elements of trading.
Mm-hmm.
A lot of people come into this and they don't even realise they're really using leverage.
No.
Yeah. And they come out with these ridiculous ideas that, I'm going to make 100% return, not realising how much leverage they're using to get there.
Well, I imagine there's 10,000 people now listening to this podcast looking up in a dictionary to see what leverage means.
I had this discussion with someone not so long ago who was a retail trader who was telling me that, he'd made 200% return in his first year. And I said, well, that's great return. I said, but, and he wanted to do it again in the second year. And I said, look, there's a slight danger in realizing that, yes, you've really turned, I think it was 30 grand into 90 grand. Brilliant. In a nice bull market, which was very supportive of the early system he learned. But you didn't do that without the help of leverage. In other words, you've been borrowing money every time you trade. That's what leverage is. It's a short loan. People don't think of it like that. You got on a nice system which went the right way in a one-directional market, which you spotted, which was really good. But that's not going to last forever. Those conditions are not permanent. They always say the worst thing that can happen is you start your career in a bull market. And you understand that when you're borrowing, and he was adamant that he wasn't borrowing money. And I said, okay. I said, if you'd just traded these instruments, okay, as cash, as part of your 30,000, you had to go out and buy £30,000 worth of stock, you would not have been able to make that sort of money. And he thought about it and he said, no, you're right, actually. I've been borrowing money short term, even intraday, to take these positions. I wouldn't have been able to take, if I was trading that intraday, actually buying the physical stock and selling the physical stock, as there was no way he'd have made that sort of money. So he suddenly realised, you're right, I am. That's what leverage is now. I get it. And I said, of course, if you was to think how much real money you were trading with, if you had 10 times leverage, that 30,000 is effectively 300,000 you're trading with. And that 60,000 profit you've made is now no longer 200%, but I think 20% of that, 60,000 of 300,000 or whatever. I'm just thinking off the top of my head. And then you see that's realistic. And of course, when you start thinking like that, it's what we call risk-adjusted return, in other words. It can be powerful because then you realise how much danger you're actually in. As soon as this turns and goes wrong, it can wipe you out overnight.
Funny enough,
and he hadn't realised.
Whilst you were just talking about that, it's actually made me think, because there's one other thing I teach people if they were just coming into the market. I teach them how a bear market works, because there is going to be so much blood on the markets when these turn. blood on the streets when these markets turn, especially, people in the States been playing their stimmy checks. So easy when the market goes up, what can go wrong? And sooner or later, I'm not calling the top of the markets, but sooner or later there's going to be a bear market like no other bear market. And a few guys won't know what's hit them. Luckily, I was brought up in a bear market. I loved them, and I loved them as a broker.
I didn't care which way it went, as long as it went fast and loads of it. It was just, bring me more.
My first month of trading was October 1987.
Oh, that's good. I was there then.
And I think that's why I managed to forge a near 25-year career in trading, because it was sort of, and I wasn't trading stocks, but as you know, every market was impacted that week, and I had my first trades on, and it was like,
interesting.
But the bizarre thing was I made money every time there was a bear market, but they only came along every 5 years.
Listen, I want to ask Dick sort of a question. I know we're pushing on a little bit, but Dick, just going back through your career, I mean, what would you describe as the sort of the attributes of a bad trader, that you've come across? And I bet you've come across like many. And actually, as that conversation sort of continues, perhaps then sort of identify, well, what attributes sort of start forming what a good trader is from your observations?
I think a bad trader lacks discipline. And discipline means knowing when to cut your losses, knowing when to take your profits, not being greedy, having set parameters. 2 or 3 of the really good traders I know are so disciplined, and funny enough, they use it always makes me think, especially my dad used to say to me, always leave something on the table for the next man. Don't try and run it. Don't ever try and get out the top, because you won't. But I think a bad trader lacks discipline. They think they know everything. Arrogance, maybe.
Yeah,
is often a sign of a bad trader.
Loud and arrogant. Yeah, absolutely.
And I guess the other side of that, is, as I've just said, to have the discipline, to remain humble, to know when you're wrong, and put your hands up and say, I got it wrong. The market's right. I'm wrong. And which is a hard lesson to learn. Even after all these years, it's hard to say I was wrong and the market was right.
Yeah.
And I think that's really, to me, that's the most important thing, the discipline, and not breaking your limits and saying, I always trade like this, and this is this is where my stop is, and you stick to your stops and you don't try and outthink the market. Because sure as hell, as soon as you start moving stops, you'll get absolutely murdered. Oh, I just have another little trade. Oh no, I'm going to move my stop. Oh dear, that hurts. And a personal thing, whenever we had problems as a broking house, we used to put a spread on. Immediately we'd put a spread on.
Yeah.
And I think as soon as we put a spread on, we were wrong. We should have just got out the trade because we knew we were wrong.
Absolutely. Yeah.
I don't know what you think about that.
Well, no, I think absolutely. A first cut is the cheapest, as we always used to say. Just get out the bloody thing and focus.
Yeah.
But also that they
don't care about the price.
Yeah, and they generally came in threes, though.
Yes, they did, didn't they?
They came in threes because you were so off focus because of the first error. Your mind was like, then you made another error.
Yeah.
And by the time you made the third error, someone was tapping you on the shoulder saying, I think you need to go and take a walk, and then come back. But they came in threes.
And that's
often
isn't it?
That is exactly that.
That point you just made there, Richard, about, the tendency to always put a spread on, that is such a powerful lesson, because effectively it's people trying to avoid taking a loss.
Yeah.
And I think, how can I be clever? And then that way I'm not really taking a loss.
Yeah.
And it invariably leads to a much bigger loss.
That's right. And it's really, really funny, because it was something which we were probably taught as when I was first started learning futures. If the market goes against you, put a spread on and you'll be able to leg your way out of it. No, you wouldn't leg your way out of it. All you were doing was giving the spread traders money. You were making Nigel Ackerman happy. You were making Nick Bowler happy. All the guys you knew how to trade spreads were laughing because they would leg you over on the spread. Just get out the position and start again, because otherwise you can't focus.
Yeah. Take that loss, let go, move on.
Yeah.
If you have to step away for a little bit because your mind's not in the right place at that point, that's an incredibly powerful gift, which the best traders are able to do.
Yeah.
Isn't it?
You know, I always remember in reading in Market Wizards about Baldwin, who was the big animal in the US pit
Yeah.
in the 80s. I can't remember his first name.
Tom.
It's Tom Baldwin.
Yeah.
And he would come in and he would, in the days when 1,000 lots was massive, he'd come in and just hit the, pit in 10,000 lots in Chicago.
Yeah.
And clean the pit out. But I remember reading in Market Wizards that every now and then he'd kind of lose his way a little bit and he'd go back to trading one lot, and sometimes for weeks and months. And kind of people would laugh at him a little bit. But he didn't feel any shame with it because he knew it was the right thing to do.
But it's pride, isn't it, as well? Pride and discipline, and pride to, never be too proud to admit that you're wrong.
Yeah.
I mean, I learned that I used to teach that to youngsters when I was broking. I said, listen, if you made a mistake, just go back to your client and hold your hands up. Say, I'm really sorry. I've made a mistake. I've overbought, or I've sold instead of buying, or whatever. I'd say 9 times out of 10, they'll let you off. And it was inevitably that they'd go back and the guy would never let them off. But it was always, to me, it's still a great lesson. If you go back to someone and say, honestly, I genuinely made a mistake, I'm really, really sorry, that people will let you out of the trade. And that's pride. It's people not being brave enough to say, I screwed up here. I've made a mistake. It's, pride comes before a fall, as they say.
Quick question, your biggest mistake? Now we're on this.
My 2 biggest mistakes, I can't just say one. I got offered a job by Salomon Brothers to go on their trading course in New York in 1986 or 7, something like that, and I turned it down. And I was with a guy called Jerry Peel at the time. He was great mate of mine, and he said, I'm going to go and do this. I said, no, I'm going to stay. I'm going to stick around as a broker. And he went off and became a fantastic trader, ran a hedge fund, and did really, really well. And I regret not doing that. And
that was Elias Poker's day, the big swinging dick, wasn't it?
That's right. It's exactly those days to go over, into the market, into New York then, and really learn how to trade. And those boys were so good. I mean, just phenomenal.
They were the masters of the universe, weren't they? That's what they were.
That's right. I think Bloomberg was there, Gutfried was there, John Merriweather. There's some legendary guys, and they were just fantastic traders. So I regret not doing that. And from a broking side, I regret now, and I've only recently come to think about this, I got offered a job by Kevin Davis, who I'd employed at the time. We bought, I was at Money Market Agencies, and we bought Pre-Bond, and he's working for me, and he left us and went to work for Man, and he offered me a job, and I turned it down. I guess he was a rival, and we were very similar, and we're quite similar characters. I turned it down. And it's only probably in the last 18 months that we've started doing some things together again. We keep saying to each other, why didn't you come and work with me? And so I regret not doing that. And I suppose a third one, it's awful. They asked one thing I regret, and I'm coming up with 3. Michael Spencer offered me 3 jobs, and each of those I turned down. I think that would have been great fun.
But I bet you've had all sorts of other good opportunities as well. So one can't live with too many regrets.
No.
Whilst you mentioned Kevin Davis, this would be a great chance for you to just give a little plug to the charity that you're involved with.
I thought you'd like that, Seg. Right, very, very simply, I did a series of podcasts last year looking back over my career in the city, talking to some of the people I knew, and how the city had changed was the basis of the podcast. And one thing that came across to me was that the city was still predominantly fat old men like me, basically from Essex, and we got our jobs because we knew someone who was a broker, and he'd given me a job because I knew his dad or whatever, and that's the way that the city worked. And it became apparent that there was a demand for diversity, both in broking and in banking, because the world has changed. I can name the 2 women who I've worked with at a broking house who were brokers, and that's absolutely shocking. Sam Boosie, who's still broking, is a great broker at the BGC, and someone called Irene Sylvester, who's now retired. But there were no women in broking, and we were predominantly all looked the same. We're all white and middle class, and the demand for change was there. So that came across to me, and I was chatting to Kevin. He said, well, things didn't work out at Man Financial. I took a long look at my life and decided I couldn't give something back here as an opportunity. So I've been helping kids in Harlem and Brooklyn who have no social capital, i.e. they don't have a Rolodex of cars like the three of us all have. And I've been helping them get a chance on Wall Street and using the people I know to give these kids a chance, because there's a demand on Wall Street for these kids. So to cut a long story short, I said, well, I'll have a go at doing that. I went to my old school, who introduced me to a school that they help finance, called the London Academy of Excellence at Tottenham, which is awful for an Arsenal supporter, right next to White Hart. Absolutely shocking thing to have to admit. And they are fantastic kids, primarily first generation immigrants, really, really bright. They got 10 kids into Oxbridge this year. And we are working on at the moment to take 10 and give them internships in the city next summer, where they can start mixing and meeting people and learn how the city works, because they don't know what the city does. You might be able to see it from White Hart Lane, but you haven't got a clue what goes on in those buildings because no one's gone to them. So it gives the kids a chance, and it gives the brokers in the city a chance to get to these kids, and hopefully they get some jobs out of it. So we're doing that. We're going to help them with clothes so they look the part, give them some money so they can buy a coffee, and generally get them going, hopefully on a city career. And what is amazing, that we did a presentation 3 weeks ago to 220 of the kids, and to you and I, be the lower six. I think it's year 12 now. I can't remember which year it is. And 90 of them have expressed an interest in doing this with us, which actually gives us a problem because 90 is way too many for us to handle. But the demand is there, and these kids want to learn. Most of them are on school meals. The average salary of their parents is in the high teens, and it's just like, they're so nice and they're so willing to learn. They're multilingual. And so in a way, this is what we're trying to do. They link into the kids in New York. Some of them will go to the university in New York, we hope. And then they'll have a contact in New York through Kevin. So Kevin and I are working on this together. His is called First Working. So anyone who wants to have a look at his website, it's firstworkings.org. And anyone who can help him in New York, be fantastic. We're going to be called Farfield, CIC, which is in the process of being set up now, and we're virtually up and running. So anyone listening who's got any ideas or any offers of help, or want to mentor or give internships, please let me know.
And what we'll do is we'll put that on our website, and also put some social media posts perhaps out there on our Twitter feed.
That's fantastic. Thank you so much. Thank you from the kids.
And I'd love to just love to somehow be involved in that, whether I can do some mentoring or coaching myself, and I'm sure.
Yeah, no, likewise, yeah.
I'll tell you a funny thing that we did. The way that that they got the mentors, we set an essay that they had to write, and part of it was what do you know about financial services, and what do you know about the city. And the second half was describe three things that your friends describe you as, which is actually quite a clever question. And this one kid sent an email, sent his essay back. So I've just read Black Skulls about options theory. I thought, at 16 years of age, I thought, oh my God, I've never understood that. How can you understand it? So they are keen, be warned.
Well, I got to tell you, there's a couple of, I've had two traders that I've coached that were featured in the last Market Wizards book, Unknown Market Wizards.
Yeah.
And they both came from backgrounds like that. They were both keen to get into the city. They both went to what would be considered lower tier universities because, it was very difficult for them to get into their backgrounds were already against them at that point. And they both tried to get jobs in banks and investment firms, but they couldn't because they went to the wrong universities. So the whole thing is starting there. But they actually went to they applied, or one of them got a job as doing risk at a small prop firm in London, and the other one applied for the prop firm trading program, and it was a prop firm run by a couple of ex-floor traders, and they showed them the ropes.
Yeah.
There you go.
Yeah.
There you go.
I mean,
All right.
That's where they are.
They flew.
Yeah.
And they are both featured in, in the Unknown Market Wizards book, both done incredibly well.
Fantastic.
Two guys who I thought, wow, you banks missed out on some talent there.
Yeah. But I'm aware of that. Yeah, the banks, I don't think they're quite so university focused as they were. And it's, the whole thing is helping these kids, because showing them how to use a Zoom call, showing them how to dress, how not to use social media, how to be careful what you're putting on social media at 16, because it will come back and it might haunt you, how to address your boss. And there's so many things that the three of us know that the schools, and it's a fantastic school, they have never experienced what we've experienced. They've never been in industry, they've never been in the cities. They don't know how you should address someone, how you should dress, what you should wear, what's expected of you, and it's helping them like that, so they're prepared. Hey, and if one of the kids makes it, then I'll be so delighted about it. I know Kevin's had some success in the States, but I just think it's a great thing, because certainly money broking and futures broking, when I was really involved in it, was a great meritocracy. It didn't matter what you looked like. It didn't matter how you sounded, what your education was. It was, how sharp you were and how personable you were, and how you thought. It didn't matter that most of us didn't have A levels. Hardly any of us had university degrees. And so I think that there's an opportunity, a great opportunity here, certainly in the city, and probably in other industries as well.
No, 100%. I mean, I never had any university degree, and the broker, my interview in a bank in those days was in a pub.
Yeah,
and and that's how it was. And you can add up. Yeah, where have you?
I think Lee Oliver.
Who?
Lee Oliver. He's been around for probably as long as I have. And I remember he was telling me, we were talking about our interviews at RP Martin, and mine was how much, what do you like to drink? And I said vodka, and they said, you've got the job. And and his interview was, he was very pleased. He just got German A level. And I said, what have you done? So he said, I've just got German A level. And they said, oh, that's fantastic. We'll employ you. You can go on the Lira desk. Just the lunacy that we all worked in.
It was that. It was lunacy.
And listen, very quickly, your business these days. I mean, you've got the charity.
Yeah.
What are you doing work-wise, and what's your business these days?
I do some writing about the markets for a company called GC Partners, who is a partnership in the physical delivery market of FX. So I write, comment, look at the markets for them, help coach their youngsters, and generally, and I suppose the old man of the sea there, and try and coach the youngsters and show them how to behave. It's something which is enjoyable. The markets are still interesting. They're still in your blood. They never get out of it, do they? The day I don't wake up and look at the markets, it will be a day when I'm no longer here, I suspect.
And I think that's what attracts a lot of people. I think, there is something fantastic about them. I mean, I still trade. I can't not. It's just a bit of fun now, a hobby. It is in your blood, isn't it?
Yeah. Are you like me, though? My wife always says that when I'm watching the news, that I'll know things before they come on mainstream news, because I'm watching Reuters or Bloomberg or Twitter or whatever. So I've constantly got a feed of news coming into my head. So, I'm worried about what's going on in Eastern Europe with Poland and Belarus, and what's Putin going to do with the gas? Is he going to use this against Poland? This is all a great big game of chess, or is he distracting people from what he wants to do in Ukraine, and he's going to march into Ukraine? And it's not really quite on the news yet. And my wife's saying, you will often say something to me, and then a couple of days later it will be up on the news, And also that you'll watch
Yeah.
the news and you'll be analysing it. You'll be, your brain will start going, "What's that mean? What's that going to happen? What does that do to the market?" So it's something which I guess we'll get
Yeah.
obsessed with.
It is, mate. Last January, my wife said, "Steve, some face masks have come in the post. What's that about?"
Yeah.
And then I'm buying tins and that. She's like, "What's going on?"
It's all I've been buying aluminium foil, but I think I've now got that market wrong because I think the magnesium shortage is being sorted. But it's really funny, isn't it? That it's just a different way of thinking.
Yeah. You do. But I think we're all, we've been exposed to it, and we've been exposed to this idea of getting our tin hats on very quickly and very early.
Yeah.
Because everyone wants it. You know what it's like. You see it first. It does make you very cynical sometimes.
Yeah.
We do have the end of the world now mentality starts to form, which can be dangerous at times. But we've seen that proverbial stuff hitting the fan.
Yeah.
And you saw it coming because of where you were.
Yeah. And aren't you frightened by inflation?
Oh yeah, I keep having this conversation all the time with people. I can't see. They're just so far behind the curve to me.
Yeah.
And I think they're caught in this trap of having given so much liquidity. It's how can they take away the punch bowl?
I know. It's just looking at the last time CPI was up at these levels, 6.2% or whatever it is, was in 1980 or 81, and interest rates were 15%.
Yeah.
God, I don't remember them being. I remember 15%, but I didn't realise it was then. And presumably in an attempt to control inflation, the Bank of England dicks around over 0.15 or whatever it is that they're worried about, and they dick around so much the pound falls out of bed and you import more inflation. It's just absolutely ludicrous to me.
I think that's there's a lot of psychology in this because it's almost like what happens is every 3 or 4 decades society repeats the same mistake because it goes through the same patterns. Right now no one wants to be seen as the person who what we went through last year was the central banks did the right thing, but they put themselves into the terrible trap now that and I do hear some people argue that we're still in a deflationary environment and that it's just temporary. But I just see, today Uber's raising its prices 25%.
Yeah.
Because they can't attract drivers to London. I've got a great friend who I go to football with, who's a taxi driver, who can't believe how great the taxi trade is all of a sudden because there's no drivers anymore, and he's getting paid a fortune to drive a taxi. And there's shortages everywhere of labour, which is how prices go up, and that's where real inflation starts. Not, but it's almost like they're not seeing it yet. That's my opinion, and that sticky inflation is going to be coming back at some point very soon. Not. I understand the arguments for it being just temporary, but when people start demanding more wages and there's shortage of workers,
wage inflation is the dangerous thing.
Well, look, Dick, I think we've really revealed that having stories to talk about is so important in life. Picking up stories, life stories of trades, of course, but also, people in the market. We kind of lost that sense of, market is about people.
Yeah.
And in our day, you knew the people. We all had. I was Randy, for decades, and and of course, you had this sort of camaraderie that was there, and that kind of protected us in a way. That was a way of sort of surviving the day and getting through what was still very, very difficult things to cope with manually. And so I think there is a big message out there for those in retail that be part of a group, share your experience, and don't forget your real life and have some social stuff going on, because it's really, really important. So, Dick, I want to thank you again for being a great guest on this podcast, and such purposeful activity as well from the charity work you do. And I think hopefully we'll get some people coming in contact with us as to how they can help with that. So many thanks again, Dick. Appreciate it.
And thank you to you guys.
Thank you for listening today, and we hope you enjoyed and got something out of this podcast episode today. And if you did, we would really appreciate it if you could go on to the ratings or review page of whichever podcast service you use and leave hopefully a favourable rating and a pleasant review about the AlphaMind podcast. We do enjoy bringing these to you. We get a lot of pleasure from it. We hope you get something out of it. If you want to know more about us and our service, do look us up on alpha-mind.net. You can also go onto our blog page, alphamindblog.blogspot.com. You'll find articles, past articles, links to past podcast episodes. You'll also see connections to pages where you can get a discount on the STA home study course. And again, thank you to our podcast sponsor, the Society of Technical Analysts, the STA. You can also find a discount code for the Trader's Mind Journal on there, which is a product we spoke about on our podcast a few weeks ago. Please also do feel free to connect to us. If you're interested in our services, in our coaching services, in our coaching programs, you can look up more details about those also on the blog page, or contact us info@alpha-mind.net, and we can tell you more about them. Or do contact myself or Mark directly on Twitter. My handle is @AlphaMind101. Mark's handle is @AlphaMind102. Or you can connect with us and contact us through LinkedIn. Again, if you're interested to know more about our work. As a reminder, we work with individual traders, both on the sell side and the buy side. We work with retail traders, investment bank traders, energy firm traders, traders in hedge funds and asset management firms. We also work with people connected to the trading world. We are executive coaches, so we work with leaders and managers and teams within businesses, helping to make the businesses more effective and more productive. One last thing, we do have a newsletter, and there's good information about us, always a useful article on there, links to previous episodes. So you can subscribe for that also on the AlphaMind blog page. Finally, that just leaves us to say thank you once again, and we wish you the very best of luck in the markets.